had a dream I could fly. Hello, Eagles. How's everyone doing? Let's have a great week. Below face Eagles. Each and every one of you has the ability to soar above the crowd, especially those that get the great aerial views from the team at ForexAnalytix.
Dale,
So
good morning, my friend. Have a nice week. Sorry to interrupt. You sound a little bit low. That's why I'm interrupting you.
okay, buddy. Let me pull my mic a little closer to me. How's that?
That's much better. Perfect. Thank you.
Okay.
Thank you.
Anyway, thanks, Steve. I said I had a dream I could fly. How many people out there believe they could be an eagle and soar above the crowd of all the messy internet stuff out there about trading? And I believe what can help you soar is becoming a subscriber of ForexAnalytix. And I believe there's 1 week left. 1 week left on the promo to take advantage of this and have all of this research at your fingertips. So you just click on the link that you have there. See if we have any patterns in play. There are a couple of things I want to cover before I turn it over. Look at all this action here. So there's action in the Bund, macro and pound Kiwi, Steve short, Aussie working, Nick short Bitcoin working, Euro Yen, Blaker 24 minutes ago took a stab at Euro Yen. So guys, you may want to consider with 1 week left to get more bang for your buck by becoming a member now. Here are the offers. Buy one, get one free, 25 off on 6 months, which gives you full access to the chat room. This will get you in the chat room without participation, but you could be an observer, and a nice 35% off on annual plans, and the 15th, so that'll take us till next Monday. So don't procrastinate, collaborate with the great team. You're not going to find a better team on the net, right? So normally when you have a subscribe to a service, you'll have maybe 1 or 2 team players providing research and analysis to you. But we all know Blake's rep, Nick's rep, Greg's rep, Stelios and Steve get all kinds of compliments on Steve's stuff on the videos. There I am and Amanda doing a fantastic job in our chat room, moderating it, keeping it active and orderly and fun. Okay, so we have fun too. So with that being said, hi Abdul, Sonia, Forex Gal. I'm getting there. Thank you for asking. All right, so the dollar has a bid today, and it started off with this candle on Friday. And you know, everyone's talking about the positioning in the market. I didn't have a chance to listen to Blake's look at the week ahead. I'm sure he talked about the positioning. We had record shorts for small specs, but now we also have them for large specs, hedge funds, record longs. So they're under a little pressure right now, and that's against a backdrop of, I believe, record shorts by commercials. I was thinking last week that we'd have one more advance. We never took out this high that we had. I'm really surprised that the stops did survive. Steve, you're going to have to get with me one of these days so we could correct this mouse thing that I have going on. I remember when we first started, there was something about a plug that was missing, and my mouse sometimes doesn't respond or responds twice. So maybe you could help me with that this week.
Sure.
This is embarrassing. So anyway, let me try and get to the daily here one more time. Okay, so I can't get to the daily here on Euro, but I can't launch a short here, although it looks like it's, you know, rolling over. We're starting to take out some of these support levels here. There's the daily. Okay, so we never took out this high. So I'll admit it, I was wrong. I didn't think we'd peak unless we took out 2092, and we never did it. We got up to 88. So these stops survived. And now we're starting to head down. I have a hard time launching shorts right here, but there's certainly a lot of potential liquidation that can occur in the euro. So, you could always say, well, okay, I missed the top, I'll have a piece on, and then if it rallies one more time, I'll welcome that. If it rallied to 150-ish or so, I can't buy it here either. So for me, the Dixie right now is a non-trade. That we're putting in a higher low here in Dixie too, getting decent action. I don't think I'd fade it today. I'd wait and see what happens, possibly into tomorrow. But there's one thing I do want to cover. Yeah, everyone's talking about the blow-off that we've had in S&Ps, the blow-off we've had in NASDAQ. So here's the daily. In fact, I think we had, we are diverging up here, but the RSI was, I believe, 89. I'm not sure what time frame it was, but it was 89 there. And NASDAQ, similar situation, but we are diverging. But the relative weakness, and I'm a big believer in, letting the market tell me what the weak sister is. And the weak sister has been the Russell. So look at these advances that we've had here, and it took all of that for the Russell to finally achieve a new high, and barely on Friday. So if you're looking for the indice to top pick for a correction that happens after the blow off, the relative weakness is definitely in the Russell. So that's where I'd be looking, because if it can't rally with what's happening everywhere else, what's going to happen when the S&Ps and Dow begin to turn a little bit weaker? I'm not sure the DAX made a new high either. DAX could be a failing rally here. I think this could end up being a key week. So, the parade will end one day, and I think we're getting very close to it. Even with these huge moves to the upside, we're getting a lot of non-confirmations, but my preferred short in the U.S. would be the Russell. Everyone with me? So over the S&P, the Dow, the NASDAQ, the one that has demonstrated the least amount of strength during this blow-off phase that we've had the last few weeks has been the Russell. It's taken tremendous strength, 7-8% in the S&P, for the Russell to finally get back to this high from a few weeks ago, and just barely beginning to take it out. So that's the way the indices look to me. I haven't looked at the metals yet, but something I talked about on Friday, I thought that the metals could be faded with a weak dollar, and it worked at least intraday. We have this candle here. Again, this to me, the gold looks like we could have one more shot up as well. Here's one, here's two. But you know what? There are many times that I'm waiting for one more jiggle, one more high, one more low, and it doesn't happen. So I have seen many markets not need to diverge more than once, and that's possible here in gold. But you know what? I miss trades all the time, and I have learned to be more okay about missing them, because there's always another trade around the corner. But so I would wait on the gold too, just like I'm waiting on the euro for maybe one more shot up in gold to give us a 3 drive to a top. And that's what I was waiting for in euro. In fact, someone asked me on Friday if I thought we had a 3rd drive in euro, and I said we only had 2. So now I don't even know what I did with the euro. Cable I wouldn't short because it's a confirmed high, and cable's acting better than the euro. But I would wait for one more high in the euro, and I'm not going to buy it and try and say, well, because I'm not short, I should be long. I'm just going to sit on my hands and look for something tomorrow. The oil's the same type of situation. We have a lot of markets that could be peaking out that have been in bull runs for quite some time. I don't think the oil has topped yet. This was a confirmed high. Steve had a target about 62.80, some fib extension target, so it could be sometime this week. In fact, a friend of mine, Jim Welsh, who I've interviewed, said there's another COT setup with commercials being as short as they've been, I think historically, and you have some very extreme net longs by the small spec and large spec. So looking for a top in crude, looking for a top in the indices, and looking for reasons to be long the dollar, but none of them right now, right here. Everyone with me? So sometimes you just have to wait and sit on your hands and wait for your setups. And then if the setups don't happen and the market goes without you, so be it. Then you look for the next entry.
Yeah, remember, you're paid to wait. And good morning, Dale.
Hey, Blake, go ahead, buddy.
Hey,
Yeah,
I was going to say that you know, a lot of people tend to forget that you know, patience is key, and waiting for those setups are key. So I had a great short in the euro yen on Friday. I actually reshorted it again overnight, but I had a great short. Yeah, I mean, but I had like the perfect price at 136.40. So it was like 100 pips higher than where it was, and I sat through it. Actually, it was 48 or 49. Anyway, I sat through it through NFP even, and I closed it out at the end of the day at 136 on Friday, and then I reinitiated the trade again overnight. But anyway, that was one of those that, you know, I sat there and I just waited for the price, and, you know, it came to me, and because if you can let price get to where your entry is and be waiting for it, then usually that entry point that you'd selected is a place where you have, you know, great risk management, where you can, you know, set up good risk reward, and so, you know, that was a good example of that. But hey,
yeah, I do recall you talking about waiting for that price up around 6.5, and yeah, that is a key, and it's hard because sometimes you think, well, you know, what's the difference? I need to be in the trade, and you know, again, it's like your T-shirts, FOMO. You have to get over FOMO, right, Blake?
Right, exactly. Hey, I got a chart that I'm putting up for you guys, and I want to see if any of our viewers, and I'm gonna, and Steve knows that I do this because he's listened to back before I had the Morning Edge webinar when I was a host there for, you know, 13 years or whatever. I don't like for everybody to sit around and just put their feet up on the desk and wait for me to say, hey, this is what I'm trading. I want you guys to think, and if I can get you to think about what you're doing, then you know, it's teaching you to fish rather than just throwing you a fish every once in a while, which is fine. But, you know, what if you know, something happens and we're not here, or I'm not here, or Steve isn't here, or, you know, then what are you going to do? I want you to be able to do this on your own. So I like to quiz, you know, people every once in a while, and because I want you to think about what I'm looking to do. So I want to ask if anybody can look at this chart and identify what it might be. Actually, you know what? Let me rephrase that. The green line is the euro yen. What do you guys think is the red line? The green line is the euro yen. What is the red line?
I won't guess.
You won't?
I know.
Why? Because
I want the community to answer. Are we getting any? Bond is a guess.
I'm seeing a lot of good guesses.
I could be wrong. I'm with Sneeps. I thought it was the yen.
It's not the yen. This is the euro yen.
Okay.
What is the red line? Okay, and I've seen a lot of guesses come in, so I'm letting them come in before I answer. I want everybody to, not everybody's going to answer. I want to give people enough time to think about what it is.
2-year yield.
Is that your guess?
90-day T-bill.
90-day T-bill. That's your guess?
Yeah.
Okay, I think I gave and there's a lot of good guesses, and actually a couple people got it right. This is the 10-year Bund. Okay, that's the 10-year Bund. That's the yield in the 10-year Bund. Okay, now if you notice, well, for those of you that are ForexAnalytix subscribers, okay, I put a trade on the Bund, on the actual Bund, long Bund, which is short yields on the 10-year yield last week. All right, and I was waiting to, I was waiting to do that. Shoot, where'd my chart go? Damn it, I have to do it this way. Okay, there it is. I waited for the euro yen to actually show that it was going to peak, but you can see this very strong correlation between the two. Now, why is that? Okay, if you think about like the euro yen, all right, the euro, you know, the euro dollar has a very strong correlation to right. The yen has very strong correlations to U.S. yields but yields in general. And so if you see the Bund go down, that's telling you that, or the Bund yields go down, that tells you that the euro dollar is probably going to be under a little bit of pressure. But if, you know, Bund yields are going down, the yield sensitive currencies, which are like the yen, are probably strengthening. And if you look at like our 10-year bonds, here, let me pull that up really quick. I'm just gonna move this out of the way and grab this. You look at our 10-year yields. Our 10-year yields, I think, look a little toppy too, which is why the dollar yen is, you know, struggling up here at the 113.25 level. So if bond yields, U.S. bond yields come down, the Bund rallies. That means German Bund 10-year yields start to come down. The probably the most affected pair is going to be the euro yen to the downside. So. And you can see the euro yen has broken this uptrend line, and I'm going to get really, you know, I'm going to get really bearish. The euro yen, by the way, should we break through 134, which is, you know, the breakout point here, and that factors into, if you listen to the week ahead video that I did, and I know I heard what you said, Dale, that you didn't. You know, I talked a lot about positioning because. FX Macro, he brought up a bunch of good points on Friday. If you guys don't follow him on Twitter, you should. And just so you guys know, I trade for Gelos Capital. So that's and he sent out a picture of the holiday party. You know, and we talked about it. He goes, do you want everybody to know, you know, what you're doing, you know, who you're trading for? And I'm like. And he goes, I don't mind. I'm like, I don't mind either. So, so you guys know who I'm associated with. Obviously, ForexAnalytix is our analysis baby, but you know, I trade for Gelos Capital. Okay, and with that being said, and by the way, just so you guys know, that group of traders, there are just a few of them in that office, and most of them have been together for about 20 years. So for me to be able to join that elite group of traders was a pretty big accomplishment, as he's been watching me trade a different fund for the last year and a half. So, and that's what got me over there. Anyway, if you look at like the COT data, the COT data for the euro obviously we have extensive or very high speculative interest, and the highest levels that we've seen since, well, you can go back, this is max, you know, I mean, whenever you get the speculative data that's, you know, the speculators are extremely leveraged at the highs, well, usually you get some sort of pullback, and that's what we're seeing in the euro. Then you go over to the yen, same type of deal. You have speculators that are extremely bearish to the yen. There's a good chance that the yen is going to bounce, and it is. You can see the euro, the dollar yen has, you know, it's coming off a little bit. But if you have the euro going down and the yen strengthening, well, then you have the euro yen that's going straight down. And that's what's happening right now. We're seeing the euro yen come down quite aggressively. Well, at least it's down 0.5%, or, you know, it's down 65, 66 pips. And I'm actually going to sell more on a rally. So I'm hoping that, you know, we get a rally at the open, you know, equity markets open, and, you know, risk appetite surges again, and we get to see a new high in the stock market, or, you know, at least the market push higher, because it is Monday. You can call it Mutual Fund Monday if you want, but usually on Mutual Fund Monday you get some, you know, risk appetite buying, and if that happens, then maybe the euro yen pops up a little bit, and I'll want to short more. So if I can get more off, like this, that's what I'm hoping for. Damn it. Okay, there we go. So if we get, you know, maybe some rallying back to, you know, 135.70 or whatever, I'm going to look to sell a little bit more of the euro yen on a rally. But anyway, I think that the showing you this chart, it gives you a better understanding of what my thought process is on why I'm looking to sell the euro yen, is because I think bond yields are coming down. I actually think yields are coming down in general. The bond market has had a lot of time. The bond market has had a lot of time to sell off. Okay, right?
Yeah, especially with the blow off in equities.
Yeah, yeah.
You know, they should have crushed them, right?
Exactly. Exactly.
Low.
Yeah, yeah. You look at bonds and you're like, well, why, you know, why isn't, you know, here's our U.S. 10-year. Why aren't we, you know, trading here?
Under 122. Yeah.
Yeah. Whoops.
At minimum.
I didn't want to do
Great
that.
point. Great
Damn
point.
it. Okay, so it's weird because I have these you know, it puts certain charts on top and blah 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 blah. So I'm just kind of have to move them around a little bit, and I haven't figured it out yet because Bloomberg has some pretty crazy setups here. But anyway, going back to, you know, the bond market, yeah, why aren't bonds down here? Why aren't we down at like 120? And because we're not, we've had all this time. You've had equities that are, you know, rallying substantially. Why haven't we, you know, rallied? And why haven't we sold off, and why haven't yields rallied? And you know, you've got to have, you're probably going to have, you know, bond traders that start to get a little nervous down here, and you're going to see some buying. And you know, you look at the 10-year, by the way, this is a pretty good chart. You can see how we hit new trend lows overnight and how we're popping. You know, that should keep the dollar yen under pressure, which the dollar yen is trading at its lows of the session right now, and the euro yen is obviously coming under a little bit of pressure too. So so anyway, for those of you, let me just tell you guys, the people that got that right, and for all of you guys that let me see. Gavin said 10-year yield, which it was the 10-year bond yield. So Brett, good job. Brett, well, you know, he might have meant 2-year. He might have meant 10-year Bund yield. You know, I'm not gonna say that he didn't. He might have just he wasn't. He got 50%. Yeah, let's say he got a B minus. I'm gonna give him a B minus, but let's see. That was Luca also guessed correctly. Good job, Luca. Expected that out of you. Chad got that correct. Good job, Chad. And yes, Brett had got that correct. He said it twice. And yeah, good job, guys. Good job. All right. So anyway, look at the dollar yen buckling like a cheap $10 suit, Steve. Yeah. Anyway.
Blake, we are also so far having some indices, you know, finding resistance at quite important levels.
Yeah, and you know what? And I'm not going to steal your thunder. I'm going to let you go over those. I'm gonna let you go over those. I want you to be. I'm gonna let you cover that because I do think that's a very important aspect. One of the other, you know, I had a small dollar Mexican trade on over the weekend, and I owned it about right here, about right where we're at on Friday, and I ended up getting out of it on this spike overnight. I had an order just to basically get out for flat, but it's looking, you know, it's looking pretty decent. This is one of those that if we get some risk aversion above 1940 is where, you know, things are gonna pick up a little bit to the upside. I think these emerging market currencies could really come under pressure. So if you're, that's why on the US dollar Mexican peso, as much as I am a bear of the US dollar Mexican peso, just so you guys understand that, I am a bear in the US dollar Mexican peso. Overall, I think the US dollar Mexican peso is rounding a top and we're gonna go lower. I sure as hell don't want to short it right now. Matter of fact, I'm only playing it to the long side. And while we're above this red line, you can see here, I'm only going to play it to the long side. But this this support zone, you know, we came down to the bottom end of the support zone, and if we break back above like 1940, I think there's a good chance the U.S. dollar Mexican peso, especially if the market gets, you know, starts to see a little bit of selling, I think we can go all the way back up to 2021 before reversing. I am not long the U.S. dollar Mexican peso right now. I want to be long, I'm just not long. But that's a currency pair that I've got on my radar that I'm keeping there. So anyway, just a couple of things to keep in mind. Forex Gal asked Blake, is there any economic data today? And let me see here. We have here's a calendar. We have Fed's Bostic speak on economic outlook in Atlanta. Fed's Williams speak on inflation targeting conference. Consumer credit later. So no, really no. It's a pretty
just some FOMC members speaking, nothing else. I think,
yeah,
Blake.
That's it. Yeah, very. So what we're going to be watching today is risk appetite, because look at the Nasdaq futures. Nasdaq futures are coming under pressure. You know, Nikkei futures are coming under pressure. I'm going to let Steve go over all those, but let's take a real quick look. I'm going to revisit the yen pairs because we talked about them on the week ahead video. This pound yen, I'm not short, and I've got to be really careful about getting too aggressive short these yen pairs, because what I tend to do is I tend to just start shorting the whole lot of them, and I'm really just trying to focus on the euro yen right now, which I am short, and I'm about 3/4 size. I have one more piece that I want to sell today, but it's going the wrong way. The euro yen keeps going down, and I really want to see a bounce to sell more. But look at the pound yen. I think this is a great risk reward to be on the short side here. You know, the Aussie yen just, you know, we rejected the 78% retracement. We took out an uptrend line here, and it's been rolling over ever since. I think if we get back below, you know, this 88.40 level, it's going to be under some pressure. And with the risk appetite, look, I mean, the New Zealand yen, this looks like a really good risk reward to be short as well. I'm not short. But the flip side to that is it's been holding up. It's resilient as all get out, which I'm a little nervous about. And then here's the Canadian yen. The Canadian yen, this has been a, obviously with the US dollar Canadian, but look at the Canadian yen maybe setting up a real big double top type of outlook. We'll have to see, because the US dollar Canadian, very similar to the US dollar Mexican peso. If the market continues to be weak, the market may sell Canadian dollars and may sell Mexican pesos as well, emerging market currencies and commodity currencies. And if you go to the COT, let's see, did I miss the Canadian? Oh, it's at the very top. The Canadian pretty high on the Richter scale as far as speculative interest goes too. So and speculators have been, they were paid in spades on Friday after the Canadian jobs report, but we get a little bit of risk aversion. Perhaps the Canadian currency comes under a little pressure, so we might see the US dollar Canadian bounce. Maybe give back some of these gains that we saw on Friday, meaning the dollar Canadian may reverse here. We're also on the 618. And if that happens, then that Canadian yen will probably come under some pressure too. Anyway, but those are just a few things that I wanted to cover. I hope you guys understood my thought process with the 10-year boons and the euro yen. I hope that helped you understand my thought process in that trade.
It helped me. Thanks for mentoring me.
Oh, my pleasure, Coach. Sometime the coach can be coached.
Oh yeah, definitely. I learn from people I've taught all the time, Blake. And really, a stellar point was, who would have thought with the S&Ps blowing off towards 2740 that yields wouldn't be higher? That really is a pearl. That's a really great observation.
Thanks, man. Well, guys and gals, I hope you have a great trading session. I'm going to pass it over to Steve, and he's going to take you through the rest of the morning, and with Dale, obviously. And I guess Greg is coming by, Stelios is coming by. You guys are going to have a nice full boat the next half an hour.
Yes, Greg, thank you very much, Blake. First of all, Greg is going to be with us. Stelios, I think, is already actually with us, so as always, whenever he feels like it, that he wants to add something, he always has useful things to say. I have to say that, to begin with, I have to say that besides my position in the USD NOK, which I'm still holding 1/3 of it, and I might hold it despite seeing the signs that we might bounce from here. Because it's only 1/3. I took profits on the other two.
Steve, I hate to interrupt really quick, but just want to let you know there was a big position. I haven't had a chance to read it. Citigroup sent out a big premium write-up on the Norwegian krona and how positioning has flipped. So that means that positioning is probably very aggressively long the Norwegian krona. That's just a little food for thought.
Yeah, I've only kept 1/3 of my position, Blake, and I think I'm absolutely fine keeping it and adding higher. I do believe that we can see a rebound from here. I think that today's candle is a warning, but you know how it is. I have a very good entry point at 829 in this third of the position. So, I really don't want to get out of the market completely.
Right.
I find no reason.
Okay,
but
just wanted to let
thank you very much. Thank you very much. I have to say that Sunday night and Friday night, I've built 5 more positions. The vast majority of them are like more or less we are at the money at the moment. Some of them I'm a little bit in the money. I actually created a basket of instruments I wanted to short. I had already shorted the Aussie USD, if you remember. I mentioned that on Friday, and it seems to be starting to work today. But I've also sold 1/3 of my regular position of Aussie yen at 88.72. And the reason we can see here is because we had this, and this is also what I put in my analysis, the 78.6, also horizontal resistance, and also very, very, very overbought levels, We had an RSI close to 80, it was at 78.7. Today it seems to be doing very well. It's so far building a very bearish candle. I'm short since 88.72. I'm short 1/3 of my regular position Kiwi yen at 81.10. The reasons are more or less equivalent. This one is not really moving. I'm at the money here. I've shorted that one. Actually, I did earlier on Friday, and I wrote it on the chat room. Gold once again at 1300. Let me show you actually. 1318 point something. I don't remember. Yeah. So I'm like $1.50 out of the money in this one. And I also shorted the SPX at 2,738.5. That's half of a position. Now, speaking about the indices, I want to show something. Let's begin by showing the bigger picture, and then we're gonna take it down a notch so we can talk about shorter term. So this is the Dow Jones, okay? And let's go back on a monthly chart. Okay, this is a monthly chart of the Dow Jones. The current monthly RSI is at 88. There is no historical precedence of something like that. I mean, this chart goes back to the 70s, and there is no such a precedence.
Oh yeah, that's the reading I was talking about. It was on the monthly. I saw it on Twitter. So the Northman Trader tweeted that number. Yeah.
No, I think the Northman Trader, because I saw his tweet at some point, he talked about the weekly one.
Oh, so the weekly was 89 or something like that.
Yes, whatever. Yes, sorry, that was the chart I wanted to show you actually. That's the monthly one I want to show you. It was because I now went on the daily and changed them, because I on purpose keep different analysis on my daily charts than on my weekly and monthly. Because
that it's overbought here.
Let me tell you something. There is absolutely nobody that doubts that this was a peak of a bubble, right? 99. And that was a peak of another bubble, 2007. Do we agree on that?
Yes.
How would you call this? Just look at the chart. You have to zoom in to realize that it's not completely vertical, and it actually has some kind of an angle, right?
It's different. It's different this time.
Yes, I know. It's totally different this time. Yes. And you know something? You're absolutely right. It is different this time. The global economy was in much better shape here.
Yeah.
Back then it was in much better shape than here, and it's now in much worse shape than it was there, and whenever else we go back to find the peak, right? So you're absolutely right. I would completely agree with you. It's different this time, right? It's a bigger bubble than the one we had the previous times. That does not mean that I'm advocating here that you should be short the indices, simply because just by looking at this chart on the monthly basis, just by seeing that all-time highs, that a weekly RSI, I had to go back to find an incident at 90, okay, all the way back at 86 here, okay. That doesn't mean that this is an indication that this is a timing, signal that you should be short.
Yeah, Brett,
simply because
like Bitcoin.
Yes, simply because this is a market that is without any single doubt in a mania phase. And when you're in a mania phase, there is no well-defined way to say, okay, this is the top. Most likely than not, you're going to be chopped up if you're trying to pick a top based on the fact that, the valuations are absurd, that we're extremely overbought, blah, 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 etc. But I'm going to tell you something in advance, and we can have this conversation again with whoever is willing to have this conversation in the near future, whenever, we can actually be sure that we found the top. Central bankers are trying to persuade us that these valuations are somewhat rich, and that's it. They're not. In retrospect, as it happened here and as it happened there, everybody's going to be recognizing that this was a bubble, and everybody that isn't blind already understands that, right? Now, whenever you're trying to short, such a huge move, obviously you have to always approach it as you're trying to trade counter trend, and you're trying to trade short term, right? So if we go down now to shorter term daily indices, we can see that that's a channel I was monitoring. By the way, this is a steep ascending channel coming out of a steep ascending channel coming out of a steep ascending channel. So you can see the parabolic nature of that, right? We had a decently steep ascending channel, then another one was created steeper in it, then another one that's steeper that we're trading within at the moment. And on Friday, we actually overthrew its resistance a little bit. Now, if we go on the SPX, you're going to see that here we had a very nice confluence, because we also had a channel coming out of another channel coming out of a wedge, and we had the confluence of a fib extension, the 261.8, and this channel's resistance. Also, if you see at the Nasdaq, the situation is equivalent. We had the confluence of a fib extension with an ascending channel. So I see a lot of resistances here, and why not? I want to take a stab at being short with a very tight stop loss in mind, and looking for perhaps a retracement. As I said, I'm not advocating that the market has found any kind of a top, but I have to show you one thing to combine it with that. This is the DSI, the Daily Sentiment Index. Okay. On Friday, we had the following readings: 95 with a maximum 100 for the S&P, 94 for the Nasdaq, and 12 for the volatility index. I don't remember when was the last time I've seen a 95 or a 5, because it's the opposite side of the market, on any instrument. I really don't remember. I mean, it's an extreme reading of an extreme reading, right? Because theoretically speaking, this scale goes all the way to 100, but I've never remember seeing 95 before. So in a sense, because it's a scale that you can never actually reach 100, I mean, only on a theoretical basis, you can consider 95 to be, the absolute ceiling, more or less. So the point is, would you be buying these markets? Absolutely not. Are they bound for at least, a decent retracement? Probably yes. So that's why I'm just explaining why I also took a stab being short, half a position, the US stock market. Okay, now we can go back to having a look at some of our thoughts on Kiwi. Okay, let me get some questions and we can take it from there. Thoughts on Kiwi? Sure. First of all, I shorted Aussie, if you remember, for the reason that I believe it was extremely stretched on the short term, and we were approaching the 61.8. I can't say that the Kiwi looks a lot different. It's also on a resistance. It's also actually, it's reaching a confluence of resistances. It's also very overbought in the short term. But between the two of them, Aussie looks weaker. And
let me ask you, did it get to that? It didn't quite get to that level where you wanted to build the position a little bit, right? You were going to sell more higher in the Aussie.
Yeah. I have a position. Yeah.
Okay.
I have.
It didn't get there yet.
No, but you know something? I really don't care that much, and the reason I don't care that much is, as I told you, I added one third. Yeah, I currently have 7 positions running. Okay, none of them is a full position, but in combination, all of them, it's like I have almost 3 full positions on at the moment.
Right.
Actually, no, it's more than I have. It's like 3.5 positions in total. Okay, so I also diversified. Now, why would I also? What's another reason I prefer the Aussie? This is the Aussie Kiwi, so somebody can say that this thing is range bound, but if you have a look at the 4-hour chart of the Aussie Kiwi, which is here. Not only that,
Looks like a head and shoulders, Steve, or, oh, look at
What
it.
was that?
Yeah, the
Right?
rising wedge. Yeah.
Yep, that's what I
Yeah.
was tracking. So
That's why you're
seeing
more
this,
negative Aussie than Kiwi, is because of this pair.
exactly.
That's
So
your reason.
seeing this and the breakdown that we had, why would I want to be short the Kiwi and not the Aussie, right?
Exactly.
So that's the reason. And by the way, let's have a look now that we're here at the short-term view of a few of these pairs. This is the Aussie. I'm also monitoring this as a possible ascending wedge. So I had this as a channel, but let me make it more clear for you. It could have possibly been the end of a corrective move with an ascending wedge, right? This is a valid interpretation, likely a valid interpretation, right? This is the Aussie yen,
Yeah.
right?
Yeah.
This is the Kiwi yen. Now all of them in 4-hour charts. This is the Kiwi yen. And that's why I was interested in started building a position in those as well. Somebody can say that I jumped a little bit the gun, but you know, that's why I started. That's why I like to scale in and scale out of positions. Okay. Steve, can you skin some CAD crosses? BUC on high, Luca, yeah, absolutely, mate. Absolutely. Absolutely. Let's have a look at them. And I'm honestly very bullish the CAD. Use the CAD. And I know you said crosses, we're going to have a look at them. Use the CAD is consolidating its losses today. Okay, a very typical behavior. Any pullbacks towards 126.50, personally, I doubt we're going to get there. In my opinion, are to be sold. Now you're talking about the Kiwi CAD. Sure, let's have a look at it. But before that, I want to remind people that we were also looking at the CAD Swiss. CAD Swiss looks very good. I don't remember which was the friend of ours here in the face webinar that actually first saw that. It's an ugly looking, but still an inverted head and shoulders. We came down, we retested the neckline in what seems to be like a bull flag, and we're breaking above it. Now let's have a look at the Aussie CAD and the Kiwi CAD. Aussie CAD. For the Aussie CAD, it's all about, if you want to be short, it's all about this trend line, as you see, this one, right? A break below this trend line, you can kiss it goodbye here.
Hey, Steve.
Hey, Grega, welcome.
Hey. How are you?
I'm good, mate. How are you?
Are you sick? You have voice a little bit. It looks like you're sick or not feeling very well.
Yeah, you know, a little bit. So far, I don't feel sick. You know, my voice is a little bit, you know, not at its best. We're going to see if that evolves to something. Jason was a little bit sick, so perhaps something's running around in the family at the moment. Might be the case. And let me show also Kiwi CAD, and of course, if you have anything to add here, Grega, you know, you're more than welcome.
Those kids are germ factories. That's how I got my URI. My wife brought it back from my granddaughter.
You're absolutely right, actually, about that.
They breed these
They
viruses.
do. And this is the Kiwi CAD, and this is probably the trend line you should be watching here in the Kiwi CAD, this one. So, by the way, the Kiwi CAD came up, retested. This broken, actually, we can redraw this channel much better. You know, I think it looks good to the downside as well, as long as that blue line holds. This is what we were seeing back then when we had a look at it, and more or less it worked quite nicely. So why not something like this? Okay, and let's have a look at the EuroCAD as well. And then I pass it to you, Grega, because I'm pretty sure that after the recent price action, and this is the break that we saw on Friday as well on the EuroCAD, below this trend line. So I think that as long as we stay below let's call it 150, although it's a little bit lower, I think that EuroCAD looks good to the downside. Although I said back then that, you know, I'd rather be long the CAD against other pairs and then not the Euro. Personally, I don't know about you, Gregor, so I can give you a good pass. But personally, I do see the scenario of a double top here in the Euro USD. But personally, I'm really not persuaded that this is anything more what we're seeing. Yes, then a correction, yes. Exactly. So I'm not persuaded at all that this is going to prove to be like a double top that's going to lead the Euro USD much lower. Personally, I believe this is a short-term pullback before a push to new highs. But
yes,
you know, I'm passing it.
I'm looking at a similar.
Okay, yes. Okay, good. And it's always good to know that we're on the same side of the market. Let me pass you the screen.
Can I just ask one question before?
Of course.
Greg gets started. For my interview, I only know my guest's first name. Pete, are you Peter Benolson or Peter Court? If you could please just answer in the question section, so I know who to make the presenter in about 10 minutes or so. Just answer in the question section. Well, we'll figure it out. Go ahead, Grega.
We can see you, Grega, by the way.
Okay, great. So as you said, euro dollar, we still haven't seen a push to a new high here. So as you said yourself, it's probably just a corrective, minor correction with an ongoing fifth wave that we are tracking towards new highs. So I think that in first part of the year, we will see price maybe rising towards 1.23 or maybe 1.24 levels, and then I would watch out for reversals. So as you said yourself, probably just a correction. We are also now at this previous swing high here from November 27 that could prove to be a nice support. There's also 38.2% that comes in at the very similar levels. So overall, I think that that bounce could occur. But when it comes to trading, I would really love to see a recovery back above, let's say, 1.2030 maybe, to make sure that wave 4 has bottomed. Okay, but we are definitely now at very interesting zone. Also, there was still this gap that occurred after New Year's holidays, so it was not completely filled. It was not filled yet last week, but today it was. Okay, so I would not be surprised if we will see a reversal higher. Also on Monday, I do not trust Monday flows, especially not if they are very strong or sharp moves. So I normally, what I experienced is that flows, sharp flows for Monday will slow down maybe on Tuesday. So I would really not be surprised if market will change its current direction in coming sessions. Okay, so I really would not fall in love with current bearish side, definitely not. Okay, also, if we look on cable, I think there is still bullish trend in play since start of November. What I'm looking at is currently at the wave 5. Okay, so we need 5 subwaves within wave 5, and I would be expecting more upside after this nice pullback down into wave 4, which should be made by 3 waves. So if we take a look on the hourly chart, it appears that wave C is now in progress. So watch out for support around 1.3470 around there, or maybe 10-20 pips higher. So in this range, we could see a new push to the upside, since I think that there is a new high coming based on this adjusted wave count, which suggests that we are now moving into final stages into this wave 4. But the fact is that we really should be careful once we see a new high here, a break above September 2017 highs, because this could be a final piece of this very complex and long correction.
Double zigzag, eh?
Yeah.
Yes.
It's great to have you here on Mondays, Greg. It really gives people an edge for the whole week.
Yes.
I was a little conflicted. I didn't think the dollar had bottomed yet, or the euro had peaked yet, but now I have more conviction. I felt, wishy-washy till I heard you today. Thank you.
Yes, and actually, if we take a look at dollar Swiss, is also just consolidating. Okay, so it looks like that dollar is still not on its bullish side. Okay, so I'm expecting to see a reversal to the upside after we complete 5 waves down within wave C of 2. Okay, so there's still room for more dollar weakness for sure. And if we take a look on dollar index, okay, on dollar index we are also tracking 5 waves in play within wave 5 of C. So still we are again looking to the downside to hit these Fibonacci extension levels before market return to the upside. So overall, I think that dollar remains bearish. Okay. And now we can also take a look at crude oil. Maybe I think that there is some interesting price action, especially for intraday traders. What I can see is that first leg from the highs, okay, first part of this pullback from the highs was made by 3 waves. And normally this means it's a corrective pose, a completed correction, or maybe part of a complex correction. So overall, it looks like a correction that should take us to even higher levels. So I'm looking this as a wave 4 as part within wave 5. So I'm still looking for a move up towards $63 per barrel or maybe even higher. So overall, this crude oil definitely remains on the bullish side, and this is, as you know, somehow positive for euro dollar as well. So, so watch out for more upside on crude oil. The support, if we get a little bit lower, is definitely here around the wave 4 of a lower degree and this base channel trend line. So I would watch out for $60 per barrel up to 61 as potential new support if we consider that there can be a new low coming before market turns to the upside. Also, I will make a quick coverage of the S&P 500. S&P 500 made a new extension leg to the upside last week, and it closed at the highs on Friday. So clearly we have to respect what the market is doing and be prepared on even more upside. But I can see prices running into some near-term Fibonacci resistance levels from where we should be aware of a 3-wave setback. So I would be looking for a wave 4. I'm not sure if we'll get down to this support, but once you see a 3-wave setback, just be aware and be prepared on a new push to the upside. Okay, so at this stage, I think that the price is a little bit extended and high. So definitely pullback would be healthy here before market.
That final, Gregor, that final 5 that you have there is going to be the end of the bigger wave 3.
Well, who knows? it's True. You know, we are in such an extended lag to the upside. So what really should matter to traders is that there is still uptrend in play, and that we should expect more upside once we see any 3-wave setback on intraday charts.
Absolutely, absolutely.
So at this stage of the game, when you see such a sharp and clear directional moves, it can be just enough to stick to the lower time frame charts and follow the patterns there, because there is nothing interesting or special on longer term scale charts, because it's just clear one direction to the upside. Okay, but here I have
it's a market in mania, indeed.
Yes, and here I have also Dow Jones, and you can see that this one is also clearly in bullish phase with room for more upside as well. So I think that pullbacks could be interesting if they occur in corrective manner, of course.
Yes, I agree 100% with you.
So
has probably some kind of a correction lower. Do you still expect USD yen to move lower from here? So do you think that, you know, that correction can come with some more USD yen weakness?
What I notice is the dollar yen is somehow trapped between bearish dollar and bullish stocks, and it doesn't move much. So it's actually trapped in this consolidation here. I'm expecting another push down here for like waiting to complete wave C of E, because this recovery that began here from November is not looking impulsive to me, okay, especially not because of this first leg. So I think that this can be part of wave B that will take wave E to the downside towards this trend line that is connected from 2016. We could retest it maybe this year and then turn to the upside. So that would be ideal technical scenario. But if we get above and made a weekly daily closes above 114 wave this swing high, then definitely I will consider that maybe this wave is already finished and that we are going much higher. But I'm not really sure in which phase stocks will be back then when this occurs.
Yes, completely understandable. What about, we have some crosses that people are watching, like we've had a lot of interest and we have a lot of people asking since last week about the Aussie yen, the Kiwi yen.
Yes, these pairs are quite interesting because I see them in some final stages of recent advances. Here we have Aussie yen. What I notice is that we have some kind of a wedge pattern here on a weekly, also here visible on a daily chart. And there's a resistance back from 2015 November highs. So maybe we retest this one and turn to the downside. As you know, this is referred as an ending diagonal, and so far it looks great. And we could be in progress here for a final push up into wave 5, as I said, towards this resistance, and then I would watch out for a bearish reversal. And again, it will be important what will stocks will do once we reach those levels here on ASEAN, because if stocks will start showing us some reversals into a deeper correction, then definitely this one could be very interesting. Once this happens, of course, it could be very interesting for shorts.
I have another question for you, Grega. Now that we saw another extremely strong number on Friday for Canadian jobs, and we had the acceleration lower for the USD CAD, has that changed your outlook for the pair?
No, not yet. I'm still, I don't like to change my views or the wave counts at very important technical levels. Okay, I have, through my history of analysis, I noticed that, as you know, when you see market if you are bullish, okay, and you see market in a pullback moving, and let's say that you buy the market at the top, and then you see a pullback towards 61 or 78% of the previous rise, like shown here on dollar CAD, then maybe you are getting skeptical about your bullish view if you maybe open position here in October 2017. Okay,
yeah, it's human psychology, yes, of course.
Yes, so actually you really have to look more from just from price perspective rather than from being right or being wrong. So looking at the price and the pullback, we are still at very important levels. Okay, so if I was expecting a bounce, let's say 2 weeks back, okay, then I don't think it would be good to change my view to bearish mode here when we are at very important 61.8% retracement, which we know
Greg,
is most important.
Probably the answer to my question is going to be at the lower time frames, which I can't see here, but you see no scenario in these USD CAD that the move higher from the end of 5 to A was an ABC.
Yes, I'm still looking at this as a potential extended flat correction. Okay, so and the reason I'm looking at is because.
Oh no, sorry, you misinterpreted my question. Can you turn to the previous chart?
Sure.
Here in this chart, you have the end of 5 to the downside at 120. Okay, no chance that the move to A was itself an ABC and that was it.
Yes, or maybe this is wave 1 and we are going to see higher or deeper wave 2. But in both cases, I think that there is room for more upside, no matter what this decline was part of.
Okay. Okay, so you're still quite confident that there is one leg of the correction missing at the moment.
Yes, exactly. You know, when it comes to analysis, I also do not want to confuse traders. If I look at the price chart and I analyze the market, that market will move in one participant direction, but even if we see some more deeper pullback than I expected, I still will stick with this view and discount if the count is valid. Because if I change my view and count to the bearish mode, okay, here, and I say we're going back below 1.2 level, and at the end of this week we will see prices back above 1.26, then I will again have to adjust my view, and this.
I understand 100%. I understand 100%.
So when it comes to analysis, I really have to focus on rules, guidelines, and just respect how long market remains valid. And that's why Elliott wave is good, because we have invalidations levels. We know where the wave count is wrong. And at this stage, it's still not wrong. In fact, I think its price itself, it's very interesting support. Even if I would not have Elliott wave level charts, I would probably be looking for this for potential support. As I said, we have 61.8%, and there was also similar swing low back in July 27th. So overall, I think that's quite interesting levels that we could see a bounce from.
Okay, very interesting. And you know, I know from experience that you're more often right than wrong. So you know, I'm gonna be keeping an eye on it. I mean, personally,
if I will be correct, I will be on webinar on Thursday, Friday. If not, I will not be here.
I know very well that that would never happen in real with you. You always give your views, and you always, you know, back them up, and you're fine with them. Either you're right or wrong, and that's what makes you a good trader. Because, as you said, you have rules, you have guidelines. You know that you're not always going to be right, as nobody can. And you never feel bad because you were wrong or whatever, because you know that, you know, statistically speaking, being on the right side of the market more often than not is all that counts.
And we also have a guest today. So Grega, the only thing that I've noticed is that on Canada, you've lowered your expectations for C. It was higher before this pullback, right?
Yes, of course.
Okay. Thank you so much, Grega, for dropping in today. And
Thank you.
Thank you, Peter, and for your patience. I'm going to make you the presenter now. Steve, great work as usual. Blake, great work as usual. And Eagles, we now have Peter Court with us. Peter, I'm passing you the baton, so should be able to hear your voice and see your screen. Looking forward to this conversation with you. Hi, Pete. How are you? Looks like he disappeared. Hello, Pete? Well, we may have lost him. Is that you, Pete? Got it. Beautiful. Waiting for your voice. Peter Court at Wheelie Dealer. I see the wheel. Waiting to hear your voice, buddy. See the website. I don't believe I have you muted. Maybe. You're self-muted, Pete, so you have to unmute yourself so we can hear you.
Is that right?
Yeah, Peter, nice to meet you, buddy.
Sorry about that. I really was battling with the app technology.
Okay. Thank you for your patience. You know,
No
had
problem.
a pretty busy Monday, and I'm grateful that you're taking time out of your day to be with us, and I've been to your website. It looks like you do a lot of great work to help people out that are trying to navigate the markets. I'd be interested in how you got started in the investing, trading industry. Maybe you could tell us a little bit about the beginning of your journey.
Yeah, I mean, I started off pretty much around the worst time possible in the dot-com boom, which obviously is the, I'm putting money in right at the top of the market, which was obviously the most stupidest thing to do. But of course, at the time, I knew no better. So I've been sort of trading for, I don't know, 18 years or whatever it is.
Yeah.
And I've seen some ups and downs. I mean, obviously the bear market going into 2003 after the dot-com boom was pretty nasty.
Yeah.
And had a nice recovery for many years up until the credit crunch in 2007. And the credit crunch was just a really horrible time. As a mainly long stock investor and very much a long-term investor, it was a pretty nasty experience. But, I did a bit of shorting and stuff and sort of came out of it okay. But, these kind of times teach you a lot, I think. And, obviously at some point we're going to see another one of what magnitude no one can know. But, we need to be aware of that and thinking of it. And it's very interesting seeing what you guys were saying about the charts, particularly on the American ones, the S&P 500 and stuff, which they do look pretty hot, don't they? But obviously, these things can still grind higher.
Yeah, you never know how far a rubber band can stretch before it snaps.
Yeah, exactly.
Yeah,
exactly.
So I've been to your website, and you have a blog, and you list your trades. What's the mission of your website and what you're doing? Do you have a business model, or is all of this humanitarian work for people to?
It's very much a humanitarian thing.
That's beautiful.
Yeah, I mean, basically what happened was I effectively retired 8 years ago. And one of my reasons so I was 44 when I retired. One of my reasons for retiring was that I'd sort of, taken my investing as far as I could, and I felt that I needed more time to be able to focus on it and to really fine-tune things and hone things and to improve, And basically that's the sort of route I took 8 years ago. And for the first couple of years, that worked really well. And I sort of read a load of books, and I felt like I was making progress, and I was learning things, and I was moving things forward. But then I got to the point 3 years ago where I started to feel I was getting stale. And I started to feel that I needed some other challenge, something else, some other buzz. And long story short, we hit on the idea of me starting a website and to use Twitter quite a lot as a sort of a way that people could get in touch with me, in a way that I could give information on a much more sort of real-time basis than you're able to do with a website.
So then your major motivation for launching this website, and I've talked to people about it, Pete, that you get more clarity when you're sharing your work. And really, what good is anything until you share it with another? And when you talk about it, actually, it crystallizes it for you as well and makes you accountable to yourself because you're sharing it with other people, and you make the effort to share your best efforts and best work. Was that the motivation for this?
Yeah, I mean, it really helps to clarify your thinking. But as I say, really, the biggest motivation of all was just simply because I felt like I was a bit lost, and I felt like I'd taken my investing as far as I could, and I needed something else to sort of get my teeth into, partly to keep myself sane, and it's really turned out to surprise me in so many ways, because as you say, it really helps. You know, we're thinking about how you do things. But the other big advantage is it's enabled me to meet people like yourself. You know, it's enabled me to meet so many great investors and traders that I would never have dreamt of having access to. And in the meantime, it's had the added benefit, I'm sure, for lots of people that they're able to get access to me, and through me they found other people and whatever. And it's been a hugely positive thing, and I'm so pleased.
It's like you have your own community through your website. You developed a community. All right, can you show us your website right now? I'm looking at, you're sharing your screen.
Yeah. Right, so a bit more exciting. Hang on. Okay. I'm worried if I touch any buttons, it'll all crash.
Don't worry about it.
Here we go. Right.
All right.
Okay, is that my website?
Yeah, it is.
Brilliant. Right. So I mean, the website is incredibly basic. One of the things that I always stress to people is to look at this bit on the home page, the changes list. Because what I do is I outline on there things I've altered on the website. So, you know, last night I wrote a new blog which included some charts on some particular stocks that those are UK-based stocks.
Okay.
And I also covered some of the index charts. Well, I put the S&P 500 in there. I also put the pound-dollar in there. So, you know, so I cover quite a few things in that. But yeah, so that changes list is really important.
That's our wheelhouse. Do you have a view on the pound-dollar that you'd like to share with us?
Well, what I can do, probably the easiest way to show that is if I go to the actual blog. So this is the blog that I wrote last night, and I'll open it up. So if I scroll down the blog, I wrote loads of, you know, waffle at the start. I talked here about the webinar, funnily enough.
Yeah. Oh, thank you very much.
Yeah. I actually put in here, there's a magazine that we use in the UK, which is a very sort of highly bought magazine. I think it has about 100,000 subscribers. And they always do their tips of the year. And one of the things I've just put in here for readers is I've just listed the tips of the year for 2018 that they thought. And obviously, with any tips, no one should just automatically buy them. But they're an interesting route to further ideas. One that I've actually got myself, I'm obviously very pleased to see them tipping it after I'm in much lower down, is Entertainment One, ETO, and there's a chart of it there and all. And I write loads of stuff about the chart, and there's another chart on it. And the interesting one there is the breakout situation.
Right.
ETO was in a sort of sideways range for probably a year and a half, and then where my blue arrow is, it broke out. And personally, I think it can go a lot higher. Anyway, if we scroll down, somewhere here I have the pound and the dollar. If I can find them amongst all my other charts that I ended up covering. Right, there's the S&P 500.
What are you saying about the S&Ps?
Yeah, really, I was sort of saying it looks a little bit toppy in the very short. I've actually got a long position on the S&P 500, and this screen that I'm showing here is actually my real live working screen that I use. Okay. And I've raised my stop loss to where the green arrow is and the green line. You know, I think pretty much like you guys were saying before, I think it's probably due a bit of a pullback in the very short term. I suspect the chances are it will test the previous resistance, and it will probably go a little bit higher before we get, you know, the final denouement. But yeah, you can see on the daily RSI, it's on an RSI of 76. That's the highest it's been, you know, looking back several years. So it does look pretty hot. So further down here somewhere, right, pound. Oh, so before I do the pound dollar, just throw one in quickly. I haven't really noticed your guys mentioning it much. I use this thing called the Heikin-Ashi candles quite a bit. And I
Okay.
absolutely love that. Funnily enough, I noticed that one of your contributors, Nicola Duke, I actually got the idea from her.
Oh, okay, yeah. Yeah,
What I love about HA candles is that they smooth things out. So they're like a sort of, they're more of an average over a couple of days, I believe. And they smooth out the noise. So basically, when you've got red bits, you're going down. When you've got white bits, you're going up. And it's very clear and easy to see. I do like that.
All right, see how you can learn. You can learn. Yeah, Nick is a very talented trader and tactician, and yeah, it's great that you learned and you acknowledged her for learning that from her. So yeah, we have
she's excellent.
Yeah, we have quite a team here. You know, people call it the dream. People call it the dream team.
The dream team. I can see that. So what I'm pointing out on the pound dollar is that if you go back several years, you've got the long-term downtrend line, which is my black line, and then you've got a sort of shorter-term downtrend line, which is my red line, and we're sort of breaking out of that red line, but the black, if we can achieve that, the black line is going to cause problems, I think.
That'd be one heck of a move up to 150. Yeah, I like your green channel though. Yeah. So that green channel is a nice channel we've been in for a year now.
Yeah, that's right. So
and it looks like it looks like the red line and the green line intersect where, say about 133 down there. That would be a pretty negative sign if we got, you know, your red downtrend line and your green uptrend line seem to intersect in the mid 130s.
Yeah,
no, I'm talking about.
If it dropped below that, that would be a bit of a worry. I mean, these things can overshoot time, and there's sort of support from the 200-day moving average around 130. But if it drops below that, I would say the pound's well on the way down.
Okay. Okay. So for now it's doing nothing wrong, and 140 spots.
Yeah, exactly. FTSE 100 I covered a bit on. There was an interesting breakout situation here from 7,600, and it's run a bit since that.
Looks like it should go to 81 based on that formation. Doesn't it? Looks like you have about at least 8,000.
Yeah, to be honest with you, I'm not.
Huh?
I tend to keep things fairly simple on my sort of chart stuff, and I'm not setting targets and stuff in that way. But personally, I think it's quite believable it can do 8,000, and chances are it could do 8.1.
Yeah. Okay.
I mean, it's
nice technical work. Yeah, I like when things aren't too complex. You know, I'm a believer in Forrest Gump trading. You know, keep it simple, and you know, otherwise, if you have too many things to look at, and you have to wait for everything to line up, Pete, there's never that perfect trade. There's no such thing. There's just higher and lower probability trades. Do you agree with that?
Oh, I think there's so much truth to that. I mean, I think the thing that I've learned over the years is that less is more, and keeping your charts and your indicators fairly simple and fairly repetitive. I use the same kind of indicators over and over and over again on pretty much everything, and you sort of learn how they work, and you get the nuances of them, you know.
Do your people that you interact with, Pete, ask you about leverage and whether they should use it or what's the right amount?
Yeah, absolutely. I mean, I've in my blog page. Let's go back to that. on my blog page, I mean, in addition to my chart blogs that I tend to do most weekends, usually on a Sunday night, I also do a lot of sort of various different subjects, really, and you know, stuff that I write about. And one of the things I wrote a long series on was about spread betting. So somewhere here, yeah, so this list here is the categories of all the different, you know, kind of groupings of blogs. If you click on the spread betting one, you come up with loads of different subjects around spread betting.
Can you give us a basic definition of what spread betting is?
Oh, by all means. Somewhere in this blog list, there is a very deep description of spread betting and how to use spread betting. I think I wrote actually 5 or 6 blogs, and I've had a lot of feedback from readers who say, you know, they absolutely love what I did on this particular blog set. One way you can find the blogs is if you go to, let's do it here, beginners and useful links.
Yeah, we're getting some attendees that are complimenting you on your website, that they have it up right now. Yeah.
Fantastic. Thank you very much. Yeah, if you go to this thing, the beginners and useful links page, because I've got a whole chunk on for the beginners there. There's a thing called the blog index list, which is probably the most ridiculous name ever, but it seemed like a good idea at the time. And if you scroll down to the blog index list, here is a list of every single blog I have written since day one. And wow. I think there's probably about 300 of the devils. Yeah. So if you look down the list, you'll find there, you know, the guide to spread betting somewhere. It's just so, oh, I think that might, yeah, there it is there, yeah.
How to use leverage safely and successfully with
exactly, yeah, exactly. So I think that totally would address people's, you know, anything you want to know about spread betting, basically, and about using leverage. And I mentioned CFDs in there and whatever. So, you know, that's the easiest way to find these. There's a search box on the home page, or there's a search box just up above here somewhere, or there should be. Yeah, there's a search box there, and basically you can search for what you want to find, or you can use the date and go onto the blog page and just use the date to find it.
You know, it sounds to me like you're a pretty disciplined technician, but do you have anything on your radar screen for 2018 that you believe could develop in perhaps, you know, gold or energy or bonds, or any big picture things on your radar for this year that we're entering just now that you may have?
I mean, the funny thing is, although a lot of people think that I am a sort of technical trader, I wouldn't really class myself as a technical trader. I would say I am first and foremost a long-term stock investor. And you know, if you go to my, let's just show you my portfolios page. If you go to my portfolios, I've got full listing there of all of the stocks I hold. And I've got this first thing is what I call my income portfolio, which is just 12 stocks, very low risk, very inactive, and all I'm after there is the dividends. And I'm just, you know, it's one I just hold forever. The dividends tick in and I reinvest the dividends, and it's all dead boring and whatever.
Okay.
And if you scroll down, I've got here, there's a list of the stocks I'm much more active with. So this is what I like to call the WD-40,
yeah.
Which is various, and they're mainly UK stocks. I do hold PayPal at the moment, PYPL, which is a US stock.
Yeah, I mean, I would too. They take 4 or 6% of everything that goes through them. It's a pretty nice.
Yeah, exactly.
Yeah.
It's been an absolute belter. I actually got hold of the shares first of all as eBay, and then they were spun out of eBay. And I think that was before people really woke up to the whole e-payment story. And since that, they've just kept going up. They've been absolutely lovely.
I got to ask you this before we go, though, Pete.
Yeah.
What do you think of crypto?
Personally, I think it's just a big bubble.
Okay. All right.
I wrote,
that's fine.
You can find a blog I wrote a few weeks ago. I mean, one of the biggest mysteries to me is I actually wonder if Bitcoin or crypto in general actually has any value at all. Is it just a forms of doing administration? So, you know, is it really a currency at all? So I'm very dubious on it.
Yeah, I still don't understand it. So, but I have to ask because it's so newsworthy. And you know what, Pete?
Yeah.
I'm so glad I reached out to you on Twitter because, you know, most people that come on here, they have an axe to grind. They have subscriptions. They have a service. And I really respect your giving spirit and how you're trying to help people navigate waters that at times can be treacherous, and appreciate the work that you're doing, and will now call you my trading warrior brother, and very glad that our paths cross, Pete, and keep doing the great work, and you're sowing great seeds by helping people like this. I really recommend that people that are into equities follow Pete at Wheelie Dealer. And wheeliedealer.weebly.com is Pete's website. So Pete, you know, I hope you have the best 2018 in every way, not just in your trading, but in every aspect of your life. I hope you have a great 2018.
Thank you, Dale. That's fantastic. Thanks for inviting me on. And it's I hope the readers found it useful. Your listeners found it useful.
They did. I thank you for coming to FACE and edifying our community very much, Pete. And we'll have this video for you to use, and I'll tweet it out there in a few hours. Again, thank you, Pete. And a great website. I know I'll be using it as a resource. So thank you very much.
Brilliant. Thank you. Cheers.
Cheers. All right, everyone. That's a wrap for Monday. That was Peter Court. And you can find him on Twitter and his website. And I'm glad you enjoyed it. And remember, most of all, don't just count your pips, count your blessings. See everyone for Turnaround Tuesday. Adios. Thanks again, Pete.